There's a number of things we're up to, having completed the acquisition of 100% of our interest in Pepper. One, we're looking to ultimately recapitalise our business, bringing new investors in, where we'll effectively reduce our ownership interest in our wholly owned portfolio in Europe from 100% to something closer to 20-30%. And strategically, we intend to run our stabilised operating portfolio largely through private capital ventures, whilst continuing to use our balance sheet to develop develop out our land bank and new opportunities. One of the things we have clearly been focused on in the past is creating scale, and with the 13 million square metres that we have owned and under management, we've created that critical mass that allows us to capture the opportunity that our customers present. We've been very, very focused now on evolving our strategy to be one of high quality and high profitability, and that's leading us to do a number of different things. One, we have actually redefined our view of core investment markets, and we've defined them into what we call global, regional and other. And within everything that's in other markets is a long-term for sale asset. They're assets that are in sub-markets where we don't believe we can get major critical mass, and critical mass is quite important. They're not core logistics hubs or corridors. And so we're actively packaging up assets and selling. We've done a number this year. We closed a deal in the UK, a deal in Germany and a deal in Poland. And we're using that capital to recycle into investing in the core locations, those global and regional markets. And over time, we improve the quality of the portfolio. We maintain and improve the quality of the portfolio, and we also drive total returns. So that's one aspect, so that's sort of disposition and acquisition activity. And then the last component is our development activity, where that really plays to the quality piece. We're very focused on making sure that we develop in the long-term investment locations where we and our partners want to be, very much servicing the needs of our major customers first and foremost. But we're also keeping a very close eye on the recovery in rents, and the opportunity to bring through selective speculative supply into the market, which would be a real determinant of the health and state of the markets. And we're already seeing some opportunities to do that, particularly in the UK, increasingly in Germany, and maybe even in the southwest of Poland. So our development machine is in action, but focused on quality and profitability, and bringing land through and making sure it's ready to go when the markets can take that speculative supply. But we do need to largely see further improvement in rents, recovery in rents, to justify that. I think we will see that over the next 12 to 24 months, we'll see a more meaningful supply of speculative development. That's really important, because that is really what is going to create the investment opportunity of the future for what is a significant amount of equity that would like to get into logistics, is attracted to it as an institutional investment class, but there just isn't enough of it to go around. So it's going to take another wave of modern supply to create the volume that will allow these institutional investors to get their capital deployed.